Hi traders, Jean here from BecomingTraderFX.com, and in today's video we will go over the USD Canadian dollar. So this trade today was the only trade we made today, and if you want to grasp the concept of how we trade and our trading style, make sure you check also this week's video, this one and the one from yesterday, and the way we traded the markets. So today we had used the Canadian dollar. This was actually a losing trade, and I'm totally honest here in on my YouTube channel and with my students. Of course, no trader have 100% winning rate, and that's just fine, because if every trade will be a winning one, that of course will be kind of a boring in trading. And yes, I'm very honest with my students, and I always share the winning trades, losing ones, and also the break-even ones. So in this video we'll go over the USD Canadian dollar, which actually missed the target for about 1 or 2 pips, but we'll go over it right now. So USD Canadian dollar daily time frame, as you can see on the daily, we said we are in this bullish structure overall, but for the last couple of days we have this retracement in the making. So if the market is retracing on the higher time frames, such as daily time frame, then of course we can still look for possible short trading opportunities on the way of this retracement. So this is everything we had to know from daily time frame. So if we move forward, this is the 4-hour time frame, and on the 4-hour time frame what we saw was of course a bearish structure. Why? Because as you can see, we have this bearish structure with market making lower highs, lower lows, and yesterday what we saw was of course this move lower. So market formed this swing high here, moved lower, and as you can see, the sell side liquidity was still untapped. Market didn't make a new low, but it just reached the previous lows and bounced from it. So when the market bounced from it today, before London trading session started, we saw market was in the discount area between this swing high and this swing low. So when the market is retracing into the discount area, we are looking for a possible market structure shift on the lower time frames, such as 15-minute time frame or 1 hourly, and our goal here was to look for possible trade targeting the lows down there, targeting this sell side liquidity of the hard time frames, and this is what we saw on the 4-hour time frame. So moving forward to the 1-hour time frame, what we saw on the 1-hour time frame before London session open, we saw this buy side liquidity. This is the Asian session high. We saw this sell side liquidity, the Asian session low, and we saw also yesterday's lows resting there. So what was our objective was of course to look for potential short trade, trying to target the lows, the sell side liquidity, after the Asian session highs were taken out here, as you can see on those two spikes. So when the market broke to the upside and took liquidity, the buy side liquidity, the Asian session highs in other words, then we said we can look for possible opportunities in opposite direction in order to target those lows down there. So this is what we saw on the 1-hour time frame. Now moving forward to the 15-minute time frame. On the 15-minute time frame, this was the setup we sent over to the students. So what we saw on the 15-minute time frame was this is the 1-hour buy side liquidity, the Asian session high. This is the sell side liquidity on the 1-hour and 4-hourly time frame, the Asian session lows. And once we took this liquidity in the London session, once the market took the Asian session highs, and then we had the market structure shift to the downside later, as you can see, this was just confirmation that price may want to move towards those lows again. Why? Because after we took this liquidity out of the market, the buy side liquidity, the Asian session highs, we had this market structure shift to the downside. We had bearish candles. We had first one, second one, and third one. And what we saw after those candles, we saw price actually broke these short-term lows. We had fair value gap zone displacement between first, second and third candle, and we said if the market will retrace to that level, then we can look for a possible entry here, stop loss at least 10 pips plus the spread. So in this case, around the stop loss was around 12 pips here, 1% risk, and our entry was somewhere here, including after the spread, and our target was those lows down there. So personally, I took the profit target and actually drag it to that level below the lows. So I was looking for 1-to-1 in terms of risk and reward ratio. So I was looking for around 12 pips target here. And after our entry, let me show you. After our entry, price actually missed my target for about 1 or 2 pips. As you can see, I was not here, but after I placed my trade, I just went out, and I just wanted to let the market do its own thing. And after our entry, as you can see, market retraced a bit more, and then it moved in our direction. It missed my profit target for 1 or 2 pips, and then it retraced again, and then we didn't have any continuation, but price just reversed and then move higher, broke all those previous highs. So what matters in your own trading is that it doesn't matter if it's a winning trade or losing one. What matters is if you ask yourself at the end of the day, did you follow your trading plan? If your answer is yes, then of course that's everything that matters, because with any trading strategy, you will have a winning trades, you will have a losing trades, and what matters most is that you follow your trading process, your trading plan on the next series of trades. So one trade doesn't matter. Of course, it matters if you follow your trading plan, but over the long term, based on the results, it doesn't matter. What matters is your trading process and trading plan, and that's the mindset you should have every trading day. If you follow your trading plan, great. If you didn't follow it, then of course you must work on your process, on your discipline, on your patience, on your mindset, and make sure you fix that. So of course I can bother now why did this trade miss my target for 1-2 pips, but it's just a market. Market is the boss. All we can do is follow our process, manage the risk, keep the right trading mindset, and just understand that those trades will come again. And yes, one trade is one trade, but you have to make sure you follow your trading process 100%. So that's it. That's the review of today's trade. We had quite a successful week with a lot of trades, so make sure you with a lot of nice trades based on our trading process and plan. So make sure you check the videos on my YouTube channel to understand and to check how we traded the market so far this week. So take care, and we catch up soon.